In the first video, I welcomed you into this implementation kit and gave you the big picture. Now, let's answer the most basic question very clearly. Why is health insurance non-negotiable today? Because if this doesn't land properly, nothing else we do in this course will feel urgent or important. A generation or two ago, people could still get away without proper health cover. Hospitalization costs were lower, treatments were simpler, and a combination of family support and small savings could somehow manage. Today, that world does not exist. One serious hospitalization in a private hospital in any major Indian city can easily run into a few lakhs. For some procedures, 10 lakh and above is no longer shopping. Medical inflation is running much faster than salary increments. Your income might grow 7 to 10% a year if you're doing well. Hospital costs can grow 10 to 15% a year without even saying sorry. Now put that next to your investments. You are doing SIPs, building an emergency fund, maybe keeping aside money for your child's education or your own retirement. All of that is compounding quietly in the background. Then one sudden medical event comes. If there is no proper health insurance, that one event can force you to break your emergency fund, redeem your mutual funds at the worst possible time, or take a personal loan at a painful interest rate. In one shot, years of careful compounding get reset. Let me give you a couple of examples from my practice. I'll keep them anonymous, of course. A 38-year-old IT professional from a Tier 1 city had a small 3 lakh health cover through work and a bit of savings in mutual funds. His father had a heart issue and needed an emergency procedure. The total hospital bill was around 8.5 lakh. The corporate policy paid 3 lakh. The remaining had to come from breaking fixed deposits and redeeming mutual funds that were meant for future goals. Did the family survive? Yes. But that one event pushed his long-term plans back by years. Another case, a 42-year-old business owner who always said, "I'm healthy, I don't need health insurance, I'll pay if something happens." When COVID hit, he needed hospitalization with oxygen support. The bill was around 12 lakh rupees. No insurance. Savings weren't enough. He ended up taking a personal loan and is still paying the MS. Every ME is a reminder of one decision he avoided for years. These are not rare stories. These are normal stories in today's India. That's why I want you to see health insurance not as a product, but as a shield for your compounding. Its primary job is simple: make sure one big health event doesn't destroy years of your wealth building effort. Now, you might say, "But Jiten, my company gives me health insurance, isn't that enough?" Employer cover is good, but it is not a strategy. It is a bonus. It can disappear the day you change jobs, get laid off, start a business, or retire. The sum insured is often too low for a serious event in a metro. And if something happens in between jobs, or after retirement, you are completely exposed. What about just using savings? It sounds brave, "I'll pay from my pocket if something happens," but in reality, you are saying, "I'm okay with one disease or accident eating into my future education fund, retirement fund, or business capital." You are volunteering your carefully built assets as the first line of defense instead of using an insurance company's money. That is not bravery. That is unnecessary risk. And the big one, "I'm healthy, nothing will happen to me." I hear this the most from people in their 30s and early 40s. You may genuinely be healthy today, and I hope you stay that way. But accidents, sudden diagnoses, and infections do not send calendar invites. Health insurance is not a prediction that something will go wrong. It is a recognition that you cannot control everything, and you don't want those rare, big events to hit your balance sheet directly. Let me use a simple cricket example from my book to make this more concrete. Imagine a top-order batsman walking out to face fast bowling. He has a choice. He can say, "I'm a good batsman, I have great technique, I don't need all this extra protection." Pads are uncomfortable, helmet is heavy, gloves and thigh pads are irritating. Let me go light and free. For a few overs, nothing may happen. He may middle every ball. From the outside, it might even look smart. See, he didn't need all that gear, but it takes just one nasty bouncer, one bad bounce off the pitch, one ball he doesn't see, to hit him on the knee, the thigh, the fingers, or the head. That one moment can end his innings or his career. Now think of the protective gear as your different layers of health-related cover. The pads are like your base health insurance, the basic protection you must have. The thigh pads are like your super top-up cover, they protect you when the impact is much higher than normal. The gloves are like personal accident insurance, protecting your earning ability if your hands, your ability to work, get damaged by an accident. And the helmet is like critical illness insurance, it protects your most vital area when a major health bouncer comes your way, like cancer or a serious cardiac event. A good batsman does not say, "If I never get hit on my head, my helmet was a waste." He is actually happy if the helmet never has to do its job in a match. Its existence gives him confidence to play his natural game. In the same way, you should not judge your health insurance by whether you got your money back this year, you judge it by whether it stood between a big medical event and your long-term wealth. Your income is the bat. Your runs are your wealth and your life goals. The bowlers are illness, accidents, viruses, and age. The pitch is uncertain. The question is, are you going out there properly geared up, or are you hoping your technique alone will save you forever? Today's healthcare reality is like facing high-quality fast bowling on a spicy pitch. Without proper protective gear, it is only a matter of time before something lands badly. So when I say health insurance is non-negotiable, I'm not talking about buying a fancy product. I'm talking about putting on the right protective gear for your financial innings. You are not buying a paper. You are buying protective gear for your wealth-building journey. You are making sure that one unpredictable ball does not undo years of discipline and compounding. In the coming videos, we will talk about what kind of covers you should have and how much, and I'll introduce you to the required cover calculator that will help you get a practical number for your own family. But before that, there is an important question we must answer honestly: when exactly should you buy health insurance? We'll talk about why earlier is almost always cheaper, cleaner and safer, and why waiting until something happens is like walking into bat without protection and praying the bouncer doesn't come your way. I'll see you there.